This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack, but with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
Good afternoon and welcome to Haystack Help Radio. Thank you so much for joining us today. You can also catch us live on Facebook. Check out Haystack Help Radio page on Facebook. Kurt Rogers giving you a nice wave there, and Cassie's running that for us. So if you've got any kind of mortgage questions, of course, we will take your calls at 303-477-5600. Or if you have a question, send it through our Facebook page there at Haystack Help Radio, and I promise you, we'll get to you. And with that, we will give our guest a proper welcome, Mr. Kurt Rogers, owner of Affordable Interest Mortgage. How are you, sir?
Happy December to you. Get ready for Christmas.
I'm telling you, the year, the months, where'd they go?
And as we get older,
yes,
they seem to be gaining speed.
Yeah, as you get older.
I get older, not you, right?
Exactly.
Well, I assure you, you have more gray hair than I do.
I believe you're right. Affordable Interest Mortgage, again, your one-stop shop for all of your mortgage needs. And each week we bring you this special show called Your Money Matters. And normally we have a lot of different guests on that deal with somehow with your finances, things with our money, and nothing more important than our mortgage. And so Kurt is our guest today, and we're going to be talking about mortgages. So once again, if you've got any kind of questions, let us know. We'll be glad to help you out. Well, Kurt, let's just look at the year. I mean, from January to where we are now, I mean, what's it been like this year in the mortgage industry?
It's pretty much the same as it has been for the last couple of years. Home values have continued to go up, but they've kind of tapered down a little bit. In 2016, it was around 10 to 11% in home appreciation, and 15 was about the same. This year, we're close to about 7%. Rates, to be honest, are pretty well the same. They're up a notch or two, but nothing that's that strong.
Mm-hmm.
I don't know if you saw some of the reports out there about, there for a long time, we were getting 80,000 people a year moving into Colorado.
Right.
That's dropped to more than half. I saw something last night.
I saw that same thing.
193,000 Coloradans had moved. 226,000 people moved in. So that's only a gain of about 30 grand.
Well, they're still driving on I-25. I know that.
Oh,
Traffic.
Yeah, all of them. All 30,000 of them are there all the time.
But that was a crazy
It was amazing
stat.
to me.
Yeah.
I didn't believe, and they gave the reasons to why. Part of it is home prices are going up. There's not enough. And you and I have talked about this in the past. We need some of them homes at 250, 300.
Right.
And they're just not as many out there as we need. They're building the townhomes and the condos as fast as they can. It's just not filling that void.
And you mentioned the word rate, but that usually comes right after anytime we talk about mortgages. That's one of the first things that comes up about rates. If you look back from, early on in the year to now, hadn't been a ton of changes, has there?
Rates at the beginning of the year started out at 4.15. Today, they're at 3.9. So, if you're looking at the national average, so no, they haven't changed. And that's some of the stuff we'll probably get into because that's one of the first questions most people ask. What about rates?
Mm-hmm.
How does that affect my loan?
Right.
Well, when the federal government talks about raising the Fed's fund rate, which affects prime, a lot of people think, well, that's going to mean my mortgage payments are going to go up. And we're going to talk about over history. That's not necessarily the case because the Fed's fund rate is the rate that the federal government will loan money to banks for, which is short-term money, not long-term money. So when you're looking at the Fed's fund rate going up, that might mean that it goes from 4 to 4.25, or from 3.75 to 4. That doesn't necessarily have an effect on mortgages, but it will have an effect on car loans. It will have an effect on credit card loans. It'll have an effect on home equity lines of credits because they're all tied to prime, which is short-term financing. Okay. They're not tied to the long-term. If you look at prime, and I kind of went back prior to when we had the mortgage meltdown in 2007, 2008. Prime in 2007 was 7.75. Prime.
Wow.
Now that's 10 years ago. Today, prime is at 4. It's probably going to go up next week when the Feds meet and say it's going to take it to 4.25. But it's dropped 3.5 points. So again, it's moved up and moved down. But now you turn around and you look at 30-year fixed mortgages. In 2007, a 30-year fix was 6.34. So prime was way up there, and mortgage rates were close to it, but that's not the case now. Things are changing because as prime came down, in 1 year, prime went from 7.25 down to where do I have it here? 3.25. Dropped 4 points in 1 year. Mortgage rates didn't drop but a half a point. So just because they raised the Fed's fund rate doesn't always necessarily mean that you're going to see that fix coming over across to the other one. Some people think it does. Some people think it doesn't. When they raise the rates next week, the banks have already taken into account that raise. Our rates went up a notch, maybe 1/8 of a point, from 3.875 to maybe 4. But they did that 3 weeks ago when the talk was about raising prime. They're not happening now. Our rates are pretty well stable the way they are. So it's always about 30 days in advance that the mortgage companies will raise their rates because they're loaning money 30 to 60 days down the road, so they're getting ready for it.
Sure. You hear the term sometimes locking in a rate.
Yes.
Explain that a little bit and the need for that or not the need for that.
Well, when rates are going up, it's always better to lock the rates. When rates are going down, like from 07 to 08, when rates are going down, you really don't want to lock because they'll keep moving down. But you can lock a rate anywhere from 15 days up to 120 days. And what 120 days is, you're saying I want to lock the rate at, let's say, 4.25, and it can never go up. For 120 days, that's my rate, no matter what prime does, no matter what anything else does. So what you're telling the lender is take that bucket of money that I need and lock it up, seal it up, and when I need it in 4 months from now, I can have it. Most people will lock a rate at 30 days because you can close the loan in that period of time, so you don't want to get hurt. So a lot of my customers now, when they call, we'll talk about rates, and I will always ask them, you want me to lock it now or do you want me to wait? They'll all say lock it now because they're afraid rates are going to go up.
So when we're talking these 0.25% or percent, what are you most of the time looking as far? Some people go, is that a big deal? Whatever. I mean, what does that mean in dollars?
That's a great question because sometimes we panic when we hear rates are going to move up a quarter. And I kind of try to give you an example. Take a $300,000 loan, and let's say your rate's 3.75. If your rate goes up to 3.875, 1/8 of a point, raises your payments $20. Now, $20 really isn't a lot of money. If you have if you didn't want to raise the payment $20, you could borrow $295,000. So 1/8 of a point is, while it is some money, in retrospect to a $300,000 loan, it doesn't add up. Now take it another way. Take a 4% loan on $300,000 and go to 4.25. Let's move it a whole quarter. Again, we're talking a 30-year fixed. It's going to raise your rates $43. Or it's going to affect you $9,000 in loan amount, meaning which you're going to go from $300,000 borrowing to $291. You'd have to come up with an extra dime.
Gotcha.
Or you're going to raise your payment $43. But there are so many other ways to affect your payment than the rate. You can't necessarily do it with taxes. You can on the kind of house you buy. But one of the areas is look at the HOA. Do they have an HOA that's mandatory or not? What are their fees? Then also look at your homeowner's insurance. Because some of the and I'm not picking on homeowners insurance companies, but some of them, when they have problems back east, they raise our rates here. And you don't find out about it till 6 months after they've done it because all of a sudden your mortgage payment is higher. Your lender sent you a note, say, guess what, your payment went up. You can't figure out why because your insurance company never told you.
And there's nothing you can probably do.
Well, there is.
But
good agents won't normally call you up and let you know that the rates are going to go up. But when you see your homeowner's insurance rate going up, if it goes up, $10 a month, that could be just cost. But they're going up 40 or 50. Think of that as an interest rate bump. Think of that as 1/8 or a quarter. When they're raising your homeowner's insurance, they're raising your rate.
Gotcha.
So you need to pay attention to it. And when it happens, shop. Just like anything else, shop. Find a broker that has rates out there that can be as competitive with the same kind of coverage because not all insurance company will carry that cost over to you. So a lot of people miss that opportunity.
Right.
So 1/8 of a point here or there, yeah, it's $20, $40 a month. Maybe you bring a little bit of extra cash, but it really shouldn't affect the housing market too much. Now, by the end of next year, I think we'll see something different. I firmly believe that by the end of next year, we'll see rates at 4.5 to 4.75. Now remember, that's still lower than it was 10 years ago.
Sure.
Now, at that point, then you'll see things slow down a little bit more,
Mm-hmm.
especially if 193,000 people keep moving out of Colorado.
Exactly. Kurt Rogers is our guest. Again, Affordable Interest Mortgage. Their number, 720-895-0500. And Kurt is also always glad to do a free consultation for you, whether that be by phone or you want to swing by the office, kind of located in the Greenwood Village area off of Arapahoe in Quebec. But again, just a great team of people. And when I say your one-stop shop for all your mortgage needs, and we're going to get into some refinancing, reverse mortgage, all the things, they can handle everything for you. And Kurt, again, I always love to just bring about, you guys are local mortgage broker. Just talk about that advantage, local, and then being a broker like this.
Well, the advantage I try to tell most people that we're local is that if anybody in my company, including myself, has a problem, you can always come see me face to face.
Right.
Okay, that's number one. Number two, it's not like you're calling a call center and you're being passed from this person to this person to this person. And when you call back to find out where your loan is, you got somebody different.
Mm-hmm.
You can't get the right answers. When you start with a person with my company, you stay with that person. And I will make the commitment to you. There's not a loan that goes through my company that I don't look at.
Right.
I know every loan that's in that system, and I know what they've set up for that loan. We're concerned about our reputation because we live and work with people. Our kids go to the same school that
Sure.
you do. In addition to that, because we're a mortgage broker, we have the ability to find loans that fit you. You go to a brick and mortar, they have a handful of loans. That's all you get to look at,
Mm-hmm.
not with us. If you come to us, we'll sit down and listen, try to say, okay, what do you want to do? Do you want to go to a 27-year mortgage? Do you want to go to a 22? Are you thinking you're going to be out of the house in a period of time that you might want to do an ARM? We're going to ask you questions because whether you do a fixed or an ARM, a 15 or 30, we get paid the same. Our job's to find the loan that helps you the best,
Right.
not us, because we're pretty standard. So it makes it a whole lot easier when we're talking to you to say, okay, what do you want to do? Where do you want to go? For example, the asset manager. Some people don't even know about it. But federal regulations requires me to introduce it to you if it's a loan that could benefit you. The federal government tells me if there's a loan out there that could benefit you, whether it's a reverse, whether it's an ARM, whether it's the asset manager, I'm required to show it to you. Not sell it to you, show it to you.
Right.
That's what you'll catch from brokers. And you don't normally get that from a lot of other places.
Right. You mentioned 30-year fixed, and you've mentioned before on other shows that we're one of the few countries that still do that.
Most countries don't do 30-year. They don't even.
Is
do
that
20-year
still, though,
fixed.
one of the most popular, or are you seeing more people shy away from that 30-year?
As rates go up, you will see people move more towards ARMs. It's just something that will happen because it'll help them qualify. One of the advantages to an ARM is you get lower payment, you qualify at that lower payment, you're able to continue to stay in that house. And if you look at statistics, depending on how long you plan on being there, you could do a 5 or 7 year fix and not have to worry about it. And we'll talk about ARMs a little later, but that's one of the ways. A lot of people right now are looking at a 30-year fix and saying, well, I can lower my payment and refinance and not extend my term. You hear a lot about that because a lot of the lenders that we deal with will give you that option. Okay. You may have been in a loan for 2 or 3 years and had mortgage insurance and you want to refinance, get rid of the mortgage insurance. Well, you don't have to go back to 30. So you're not adding extra months to your mortgage, and you're lowering your payment, and you're getting rid of the mortgage insurance. So those are some of the things that we can kind of show you different options.
Great. You're listening to Haystack Help Radio and a special edition of Your Money Matters with Mr. Kurt Rogers. Again, if you've got any kind of questions about mortgages, our lines are open, 303-477-5600. You can join us on Facebook Live on our Haystack Help Radio page. We'll be right back.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code radio50. 303-325-2776. That's 303-325-2776.
Affordable Interest Mortgage still has rates in the mid-threes. Do that upgrade that you've been putting off, or pay off that high interest rate debt, or just get ready for the holidays. Purchase your next home with only 2% down and no mortgage insurance. Take AIM, Affordable Interest Mortgage, 720-895-0500. We all know rates are going to go up, so why keep putting it off when you can borrow money in the threes? Do you know paying mortgage insurance is like adding 1.5% to your current rate without the tax deduction? Why? Take AIM, 720-895-0500. Call now and find out how to pay off your home faster, save over $100,000 in excess interest that you get to keep, all without changing one penny of your spending habits. Take AIM, 720-895-0500. VA loans to 100% with cash out in the low threes. We've been serving Colorado since 2001. Where it's all about you is not just our motto, it's who we are. Get the respect you deserve. Affordable Interest Mortgage, 720-895-0500. NMLS 298191, regulated by DORA, equal credit lender.
At Lone Tree Veterinary Medical Center, we believe that all pets deserve to have a good life. And because we know that your pet will have many different needs throughout its life, we offer complete pet care services every day, all at one location. Whether your furry friend needs a checkup, advanced medical care, surgery, boarding, grooming, obedience training, food, care products, or toys, we are here for your pet 7 days a week. At Lone Tree Veterinary Medical Center, we know that you want the very best for your pet, which is why you can count on us to provide top-notch care in everything we do. We are certified with the highest rankings by the American Animal Hospital Association and hold a gold star rating with the Better Business Bureau. You and your pet can visit us Monday through Friday from 7 a.m. to 8 p.m., Saturday from 8 a.m. to 5 p.m., and Sunday from 10 a.m. to 5 p.m. We are located at 8681 East Lincoln Avenue in Lone Tree. Learn more about us by visiting our website at lonetreevet.com or just give us a call at 303-708-8050.
Snow's coming, and at Lynn Lyle Chevrolet, we have over 150 pre-owned trucks and SUVs on sale right now. We made a special purchase and will wholesale to the public. 4x4 starting at just $59.95, so come visit us. Lynn Lyle Chevrolet, I-225 in East Colfax, or on the web at lynnlylechevy.com.
Rush to Reason with John Rush, weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio and a special edition of Your Money Matters. Kurt Rogers is our guest. 720-895-0500 is the number for Affordable Interest Mortgage. You can check out their website at aimortgage.net. Once again, if you've got any kind of mortgage questions, we'll take your calls, 303-477-5600. So refinancing, Kurt, hear a lot of ads, see a lot of ads about that. And how do you go about deciding? Somebody calls you and, hey, I'm thinking about refinancing. What's that little interview look like and questions that you ask when someone mentions refi?
One of the first questions I ask, what are you looking at obtaining? By your refinance, what do you want to do? Are you trying to lower your payment, shorten your term, pay off your home faster, pull cash out? What are you looking at doing? There's a myth out there that you have to drop your interest rate 1% before you refinance, or it's not worth it. Well, I understand the thinking behind it. If you have a $100,000 loan and you drop your rate from 475 to 375, you're only dropping your payment $50.
Gotcha.
Well, $50 in that case probably is not a lot. But if you drop it 1% on a $400,000 loan, you're dropping it $230. So maybe I don't need $230, but I can still drop it.
Sure.
So it depends more on what you're looking at doing. The banks, Colorado has a law called the Colorado Tangible Net Benefit, and this was created back in 2008 because people were doing loans and their payments were going up. They weren't getting any cash out, but they were redoing their loan. I don't understand why they did it, but there was no benefit to the customer. Colorado says, no, you can't do that anymore. There has to be a benefit. One of the benefits has to be that your payment, if it's just a straight refinance, has to go down a minimum of 5%. So if you've got a payment that's $1,500, you got to drop it at least 5% of that, or $75.
Okay.
So that's the minimum. And if you're not even doing that, we're probably not going to talk. I'm going to say this isn't a benefit to you. There's another way to maybe solve your problem. That just came out. One of the biggest things that people that call me up that want to refinance is they want to eliminate mortgage insurance. And you hear a lot of advertising about that. While mortgage insurance, I think, is a great tool to use if you don't have the cash to buy the house, because you can get in at a lower rate and you can get the house and lower down payment. But after you've been in it for a while, that's when 6 months to a year, that's when you start looking at, say, okay, I should refinance this. I don't have to go back to 30. I can go to 29, but I can lower my rate and more than likely gas the mortgage insurance. Because home values are going up, you're able to have a lower loan to value and be able to refinance it. And I'll give you kind of an example on how some of that works. When you're buying mortgage insurance, if you have a $350,000 loan, let's say you have a VA loan or an FHA loan for $350,000, let's say your rate's 3.625. Your mortgage insurance on that is $245 a month. Now, if you want to refinance that, I'm going to take your payment up to rate up to 4.625. But at that FHA payment, that's $19.41 a month with the mortgage insurance. By me going to 4.625, your payment goes down $50. And you have no mortgage insurance. So the mortgage insurance, when you're buying mortgage insurance on a home, you need to understand it's raising your rate about 1% to 1.5% higher than what you're actually paying. And the other disadvantage to that is it is not tax deductible. Now, with all the other new tax laws, there's another scenario. But mortgage insurance you can't write off. The interest on that 4.625 you can. So besides saving $50 a month,
you get that.
You get the tax deduction of it, so it can save you even more. And even with the new laws, you're still going to get the tax deduction as long as the loan amount isn't above $500,000.
Okay.
And that's pretty hard to get there. That's less than 15% of the population to go above that number.
Sure. What are some of the other things mentioned in the tax laws? What are a few of the other things you're understanding and maybe haven't come to fruition yet, but some of the other things out there that...
There's a lot of people that think that the new tax laws are going to really affect mortgages. Yes, they've dropped the interest deduction on a home, on a mortgage, from $1 million to half $500,000, which means if you have a loan amount above that, you don't get to write it off. But what they did was they doubled the standard deduction from $12,500 to $12,000 to $24,000.
Okay.
Which means basically, am I paying over $24,000 in interest on my home? Well, no. 88% of the people it won't affect. So while we don't like the fact they brought it down to $500,000, it's not going to affect you. You're actually doing better off because you got a bigger deduction at $24,000.
Right.
In addition to changing the different tax brackets is going to help you. Now, they have changed. If the law goes through the way it's written now, you don't get to write off the interest on any second home, period, no matter what it is. So there might be a whole lot of mountain property go up for sale here starting next year.
Right.
And then the other one is, if you decide to go out and get a home equity line of credit, the interest on a home equity line of credit is no longer tax deductible. Up till now, let's say you had $1 million loan, you could write off the interest on that $1 million loan. You could then go out and get a $100,000 home equity line of credit and write the interest off on that. Well, they've now dropped it down to $500,000, but they've eliminated the interest on the home equity line of credit. Those things are going to go away. Again, put it into perspective. If they're doubling your standard deduction from 12 to 24, you're probably not paying $24,000 worth of interest on your home.
Sure. And if you are, they should call you.
It's really not going to hurt you that big. You probably need to call me because there's other ways to get around that.
All right.
So those are some of the things that I see.
Okay, good deal. Now, talking about refinancing, let's talk about some other type of loans that you have available. And one's a jumbo loan. Define that for us, and who's that for?
Jumbo loans. Well, the first thing about a jumbo loan, the rate is normally 1/4 to 3/8 of a point higher than a standard loan. Standard conforming, you'll hear conforming or conventional. They're one and the same.
Okay.
Which means 80% of the people finance at this price or less. Now, a lot of that's changed. Starting in January, the conforming loan limit was $424. It's now gone to $453. So that's a substantial jump in 1 year. In addition to that, that's whether it's an FHA, whether it's a VA loan, whether it's a conforming loan, they've jumped up to that. They also have if you're in certain counties, that number's jumped all the way to $679,000 and some change. Well, when you start looking at that as a conforming loan limit and not having to deal with that extra quarter to 3/8 of a point, it changes everything, especially here in Colorado, because of those home prices. They're all sneaking up there.
Right.
So that's a great advantage with what you can do. Now, remember, we're talking loan limit, not purchase price. If you buy a $600,000 house and you put 10% down, you're at $540. You're fine because it's now $453.
Gotcha.
You can
Okay.
start seeing things, and you can start seeing some of the changes that will happen. So there's a tremendous benefit for that. The other advantage with the higher loan limits, on a jumbo, they will only normally go to 85%. On rare exceptions, 90% loan to value. Normally the cost is higher, and there's mortgage insurance. They don't get around that. With a conforming loan, I can go to 97% loan to value with these new limits, 679, with no mortgage insurance. So everything starts to change now because those homes that when people would go out to look, it's actually going to take home values in that price range and maybe push them up because there'll be more people that can afford them now because they don't have the down payment.
Mm-hmm.
They're getting a better rate. They're not in the jumbo. They don't have to put as much money down. They're going to be able to qualify for that a whole lot easier now than they did before. That starts January 1. I actually have a lender doing it now. They're going to hold those loans till January 1 before they sell them off. But they're doing it now. So that's a big difference.
Gotcha. Man, sure is.
I mean, yeah.
Yeah.
So when you're selling your house, you got to think of that. Now, one of the other things I'm trying to explain to people is if you're looking at, some people will say, should I still buy investments? In these new loan limits, they've raised a 2-unit to $580,000, just in excess of that. Well, if you think about a 2-unit, you can find a nice 2-unit duplex. Buy one of them as your primary. Get the better rate. Put less money down. Have the one next door as a rental. Start having rental property. I have clients this last year when the limit was less, they would do that. Then a year later, they turn around and would go buy another property, turn the unit that was their primary into a rental. That's how they get into the rental business, and they do it through the primary. Now with these new higher limits, it's going to give you opportunity to test that market if you want.
Wow.
And you're not making a payment
see,
on
this is-
$580,000.
This goes back to our first segment. I talk about the difference between like you as a broker. Nobody at these traditional bank or anything is going to sit down and go through probably all these different scenarios. And to be honest with you, I'll say
They
it
don't
so
offer
you don't
them.
have to. They don't have it to offer, okay? And probably most of them, they don't have the knowledge there because they don't offer it. They don't even need to know all this stuff you're talking about.
And I appreciate that. I'm not here to pick on banks or other companies.
No, I will. Yeah.
Okay, go ahead. But as a mortgage broker, I'm required to pass a test. Every year I have to retest myself, take a renewing education class. Individuals that work at a bank are not required to do that. They are not held to the same standards as independent mortgage brokers. They don't have to know the laws and they don't have to follow the laws. They're not required to give you certain things and keep you up to speed. Now, the bank may require it, but they're not required by federal law. So there's many people that were brokers in the years past that went into banks, and that's where they're staying. And again, you come back to the banks, and it's nothing against them, but they're very limited in their product.
Sure.
All they want to do is sell this product because all they want you basically in your mortgage is so they can get their banking. Because their money's made in banking, not so much in the mortgage, even though the rates are higher.
Right.
There's not a bank out there I have not been able to beat in rates, a brick and mortar, not one.
Sure.
Because they're doing a whole lot more stuff than mortgages. So they're going to charge you more.
As you talk to realtors and all, and we'll hit a break here in just a second, but as you talk to realtors around and people just come in and out of your office and everything, what's kind of the forecast? What is 2018 looking like to most people?
We all kind of agree with the same thing. I just met with some this morning that the home values are going to continue to increase at 7. By the end of the year, they may come down to about 5. We're still lagging behind in the production of places for people to live. So there's still going to be a demand, but you're going to start to see that taper off as a lot of these condos and townhomes and these new homes that are being built start to finish. You're now going to start to see that. And where you're going to start to see it is in rentals. Rental prices will start to come down a little bit, which means there's a bigger availability. There's a lot of people wondering if you listen to the statistics, The refinance business is supposed to decrease by about 43%, and the new purchase business is supposed to only increase about 5%. So that's a whole lot less business for realtors and us to be dealing with to make work.
Well, when you're talking about some of these payments at, $1,700, $1,800, $1,900 to own, you can't rent anything decent around that for a couple of bedrooms.
You bring up a good point. Like I said, at that one with no mortgage insurance and only 5% down, you got a payment of $1,900 on a $350,000 house.
Yeah.
You can't, like I said, that's costing you 24 to 26 if you're doing it now.
Sure.
That's a 2,500, 3,000 square foot home almost anywhere. So yeah, it's still a great time to buy instead of rent. And if it ever becomes a problem, turn it into a rental, because our rental market is still quite strong.
Yeah, huge.
Yep.
Again, Kurt Rogers is our guest. Affordable Interest Mortgage is the company. 720-895-0500. Again, a free consultation. Kurt will be happy to talk with you, whether it's about refinancing, a new loan. We'll touch on even reverse mortgages before we get out of here today. That's still available as well. If you've got any questions, give us a call, 303-477-5600. This is Haystack Help Radio.
Now is a great time to get your furnace inspected. Littleton Heating and Air Conditioning is proud of their 45 years of HVAC service to Littleton, Highlands Ranch, and Denver metro area. Littleton Heating and Air Conditioning is your Lennox and Carrier expert heating and air conditioning contractor. They are proud to offer the finest heating, air conditioning, and indoor air quality products with prompt and professional customer service and satisfaction. Call today and mention Haystack Help Radio and save $25 off any repairs or $100 off your furnace installation. Call 303-798-3880. That's 303-798-3880 for your appointment today. Littleton Heating and Air, A-plus members of the Better Business Bureau and official Haystack Help registered company.
Are you buying your first home? Or are you right-sizing or downsizing for lower maintenance or a lock-and-leave lifestyle? This is Pamela Meyer of Denver Home Navigators with Keller Williams. I can help you discover and reach those goals. This is more than just real estate. It's about your life and your dreams. Call me today for your free consultation at 303-506-0106. At Denver Home Navigators, we help map your course. It's all about you. Call me now at 303-506-0106 or visit my website at denverhomenavigators.com. I'm Pamela Meyer, the exclusive agent for Haystack Help Radio, and I look forward to talking with you soon.
Did you know that each and every day, 21 United States veterans commit suicide? Last year, active duty suicides surpassed the number of combat deaths. When soldiers come home, it is a huge adjustment, and they're often plagued with disabilities, such as immobility, PTSD, or a traumatic brain injury. You can help by donating to Freedom Service Dogs. This nonprofit rescues dogs from local shelters and trains them to become service dogs for these heroes. Help give back to those who have given so much. Donate now at freedomservicedogs.org.
This is Scott Watley from my friends at Rampart Firearms in Sedalia. This is a great store, family owned and operated. They buy, sell, trade, and consign firearms. You will find a great selection of new and pre-owned handguns, shotguns, and rifles. If you can't find the gun you want, Rampart Firearms will special order your gun at no extra cost. Found a gun on the internet? Rampart Firearms will do one firearm transfer and the background check for only $10 if you mention Sportsman of Colorado. Rampart Firearms, 720-468-0050. That's 720-468-0050. Located at Highway 67 in Santa Fe in Sedalia. Rampart Firearms open 7 days a week. 720-468-0050.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analyst has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analysts is an official Haystack Help registered company.
Got a question for the station? Email info@crawfordbroadcasting.com. Now back to Haystack Help Radio.
Welcome back to Haystack Help Radio and a special edition of Your Money Matters, brought to you by Affordable Interest Mortgage, 720-895-0500. Kurt Rogers with us in studio. Cassie's running our Facebook Live, so join us on there on our Haystack Help Radio page. If you have any questions, again, send us a message to our Facebook, and we will be happy to answer your question. We're talking a lot about just mortgage today, all the different type of loans that are out there, refinancing. And, Kurt, let's talk about first-time home buyers a little bit. What's out there for those folks?
Actually, there's quite a few things out as the lenders are changing, trying to gather that business. Problem is finding the homes. A first-time home buyer, like I said before, we have these loans to where a customer only has to put 1% down. And again, no mortgage insurance. And that's not an FHA loan. So it makes it much more attractive, again, talking about those different rates so you're not losing the tax advantages. There are loans that we have through a company called Chaffa, which many people, down payment assistance loans, to where you only have to put $1,000 down.
Wow.
So when you're thinking about a home, let's say you find a $150,000, $200,000 house, you might be able to get into that for $1,000, $1,100 a month. That's a 2 or 3 bedroom. Maybe it's condo. But you only put $1,000 down. You have to put more money down to rent a place than to do that.
Exactly.
And if you want pets, you can have your pets. You don't have to pay extra money to have pets. So there's still a lot of advantages into doing that, or maybe buy a duplex with somebody else, have 2. So there's a lot of those. There's 6 different Chaffa programs out there. Some are conventional, some are FHA, to where you can get around with just putting $1,000.
Right. Self-employed always just seems to be a headache for everyone.
Kind of went away for a few years.
Right. Is that looking better?
Self-employed prior to the mortgage meltdown was just basically tell me what you make and you were good. Even though you were self-employed, they would look at maybe your gross, what your revenue was instead of what your net. Well, the banks don't do that anymore. They're looking at your net. They're still required to prove that you have the ability to pay back. One of the ways that they do that is by bank statements. Now, if you're self-employed, you either have a business account and or a personal account. You show us your bank statements for a period of time, and they will count those deposits as income. They don't care where they come from. For example, say you're depositing between $600 and $6,500. 1 month you do 9. 1 month you do 9. Then 1 month you do 5. They add them all together. They don't look where the money came from. They just add the deposits together and divide by 12 or 24. That now is your income, and that's what you can qualify on. You can do a standard ARM. You can do a 15-year or 30. It doesn't matter. Right. So a true self-employed person with bank statements can get qualified.
Right. And we've talked about this before, and we've done shows with our credit expert and helping people with credit. But even if you're thinking about doing something in the spring, it's a good time to call you now to sit down, kind of get a good look at everything, because there may be some few things to work on. Let's say somebody has had some credit hiccups. You guys have had pretty good success in helping a lot of those people.
That's a very good point, because over the last 30 days, I've had a lot of customers that, because of what happened with Experian, and a lot of people froze their account, and being Christmas time where a lot of people are taking advantage of opening up new credit cards.
Right.
I had a customer just the other day. He opened up a credit card at Target. He then went and bought something, paid cash. For some reason, they put it on his account, said he's now 30 days late. He didn't borrow any money, but they got him as a 30-day late. And had he not been looking at buying a home, he would have never known that. So now he's fighting the battle. And because of what happened with Experian, he froze his account. Well, in order to fix it, you got to unfreeze it for a period of time. Let us go in and get it fixed for you, and then turn around and refreeze it. All of that starts taking more time.
Right.
So, yeah, it is a good time now to say, okay, where am I? What's going on? If I've opened new credit cards, how has that affected my score? And we've talked about that a lot. Every time you open up a new credit card, it dings your credit, no matter how good it is, because you're taking the average life of your credit cards, not mortgage payments, not car payments, of your credit cards, and you're shortening. Mm-hmm. And as you shorten the average life of those, your score goes down, not up. Even if you're paying on time, it'll still go down.
Right.
So a lot of times that can hurt you.
Do you still get folks that get confused with the terms? And we've talked about this before as well, pre-qualified and pre-approved.
They're getting better.
Okay.
They are getting better. Pre-qualified means I can look at it and say, yeah, from everything I see, yeah, you should be able to buy the home. Pre-approved means you've given me your income, either whether it's paperless or you hand it to me, and your assets. I've had an underwriter look at it, and they said, yeah, if the house appraises for what you want, you're good.
Right.
So it's actually got somebody that says, yes, you qualify for this loan. And that is, according to the regulation, that's what you're supposed to do. You just can't give out a pre-approval if you haven't received the documentation.
Okay. We talked about investment properties just for a few minutes in our last segment. So when people are looking at those, and you say now's maybe a good time to do that, but again, what's that scenario look like? And what's that conversation? Somebody calls you today and said, hey, I'm thinking about doing something with an investment property. What are a few of the questions that you ask there?
What is enticing you to think of an investment? Are you looking at the cash flow that the property can give you, or are you looking at a property that you can buy, fix up, and turn around and sell? Because those are the only two reasons you buy an investment.
Right.
The second question behind that is, have you ever done it before? And if you say no, then the third question is, What are you
thinking?
Who is telling you that this is? Do you understand what it takes? Do you understand rates are higher in investment property? Down payments higher on it. Do you understand that just because you're renting a place for $1,500 a month and the payment's only $1,200, that you're not making $300 because you're going to have expense?
Yeah.
The banks count only 75% of what you gross on rent versus the net. So when that happens, that affects your debt to income ratios. So I asked them those questions. Do they understand that there's things that are going to pop up that they're responsible for? Have you thought about, are you going to need a property manager? Is it a place that you can fix? Do you want those phone calls at midnight? Do you have somebody that can come in and fix the property if it needs to be fixed for the minor stuff?
Yeah,
I mean,
because it is going to happen.
Yeah, I had a rental property once, and the guy said his microwave broke. And I just put it in a year before. So late at night, I went over. I went inside, and we put a cup of water in there, and I turned on it, and all of a sudden it just started showing all kinds of times, and it wasn't heating up the water. So took the water out, unplugged the microwave, turned around, plugged it back in, put it in, worked perfect. It just needed to be rebooted. But that was an 11 o'clock at night phone call that I got.
Then you needed to be rebooted. Yeah.
You need to understand that stuff happens.
Right. Again, Kurt Rogers, our guest, Affordable Interest Mortgage, and they can handle all of your mortgage needs, 720-895-0500. Before our break here, let's just touch on, we don't have to go into a lot of detail, but just about reverse mortgages. And, there were some changes in those over the last couple of years, but still very viable and still a good tool for some people.
It's actually a great tool. A lot of people are starting to understand a reverse mortgage can fill a gap. It's not for everybody. But if you decide that's the house you're going to stay in, unless something serious happens, you can eliminate your mortgage payment. You're still going to have to pay your taxes and your homeowner's insurance and any HOA or other fees that come, but you're not paying a mortgage insurance payment.
Right.
And with the rates on a reverse mortgage, they're less than what a home is appreciating at. That equity pretty much kind of stays with you. You have to be 62. You have to show the ability to be able to pay your taxes and homeowner's insurance. And depending on how much cash you want out that you qualify for, when you want it, you can get it on a monthly basis. You can get $500 a month given to you for the rest of your life. You can sit on $100,000 and wait a couple of years till you need it. However you want to set that program up, you have the ability to do. And that stays with you.
Right.
I mean, we have clients that they'll do a reverse and they'll have $100,000 that they can tap. And they'll leave it there. And they're waiting for the time to say, okay, now I want to use it. Mm-hmm. It doesn't go away. Even if the value doesn't go up, that $100,000 doesn't go away. It's still accessible to you.
And highly recommend people to call your office if they've, thought about it, but heard a lot of negative things about it, because there are a ton, that's another whole show, just misconceptions out there about reverse mortgage.
And a lot of people think that you don't own the house. The house goes to your estate. The kids, or whoever you give it to, is never liable if the house has depreciated to less than what the payoff is. They're not on the hook for that. If there's any equity, it goes to your estate, it goes to the kids, goes to who you give it to. If you have somebody, one of the nice things with the reverse, a couple of years ago, they changed it to where, let's say you married a 55-year-old woman and you're 65. Well, you have to be 62. If something happens to you, they were forcing that woman to have to pay off that house. Not no more. She gets to keep the house and never have payments. So it just goes forward with her also. whether it's a her or a him. It doesn't matter, but it works that way.
Right.
So you don't have to be 62. It's calculated off your age, but you don't have to be 62 as long as one of the members is above 62.
Affordable Interest Mortgage, 720-895-0500. You're listening to Haystack Help Radio.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
Okay, turn here. Well, watch it. During the moment when you're in a serious car accident, you aren't thinking about who's at fault.
Oh no, what if I never hear my kids laugh again?
You're not thinking about hospital bills or insurance claims.
What if I never hear my husband say I love you again?
I changed your oil. And you're not thinking about police reports or who your lawyer should be.
I never thought this would happen to me.
In the split second when you're in a car accident, you're thinking about the most important things in life. When you've been in an accident, call Kevin Flesh of Flesh Law at 303-806-8886. Kevin will help you determine who's at fault, what to say to the insurance company, and who will help pay for your hospital bills, so you can get back to thinking about the important things. That's Kevin Flesh of Flesh Law at 303-806-8886.
Affordable Interest Mortgage still has rates in the mid-threes. Do that upgrade that you've been putting off, or pay off that high interest rate debt, or just get ready for the holidays. Purchase your next home with only 2% down and no mortgage insurance. Take AIM, Affordable Interest Mortgage, 720-895-0500. We all know rates are going to go up, so why keep putting it off when you can borrow money in the threes? Do you know paying mortgage insurance is like adding 1.5% to your current rate without the tax deduction? Why? Take AIM, 720-895-0500. Call now and find out how to pay off your home faster, save over $100,000 in excess interest that you get to keep, all without changing one penny of your spending habits. Take AIM, 720-895-0500. VA loans to 100% with cash out in the low threes. We've been serving Colorado since 2001. Where it's all about you is not just our motto, it's who we are. Get the respect you deserve. Affordable Interest Mortgage, 720-895-0500. NMLS 298191, regulated by DORA, equal credit lender.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam, 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical, you'll see the difference. That's 303-321-1578, stackoptical.com.
Len Lyle Chevrolet is having its year-end clearance sale on all new 2017 Chevrolets. Other Chevy dealers are offering 20% off. We're going to top that. We're offering 30% off on new Chevrolets. Len Lyle Chevrolet, I-225 in East Colfax, or on the web at lenlylechevy.com.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
And we are back. You're listening to Haystack Help Radio and a special edition of Your Money Matters. Again, AImortgage.net, 720-895-0500 is the number for Affordable Interest Mortgage. Free consultation if you've got any kind of questions at all. I promise you, Kurt and his team will take the time necessary to help you out and answer all your questions for you. And Kurt, when you think about buying a house, I guess the first thing you think about is the mounds of paperwork and the 4,000 signatures. I mean, and I don't know. I mean, has that changed much over the years, or do we see any change coming where, hey, it might be a few documents to sign?
We probably could have thousands of customers call in and tell you the nightmares that they went through on all the documentation and the questions that are asked. From my point of view, we understand they didn't always make sense to us either, but because of regulations, they were required. What has changed is some of those guidelines have lightened up. Some of the documentation that they require, they're not quite being as far as in depth. One of the things that changed there for years, the maximum debt-to-income ratio was 43%. Well, so you're trying to figure out how you can justify income, where can you count the money, and you're kind of going through all those questions. While you may make it, they may not want to count it. They've actually raised that up to 49 to 50% now. Now, when you factor all in, that's still a very good percentage, and the banks are still pretty safe with that. So a lot of the guidelines have started to change the stated income. So those things are beneficial. What's really changed, especially this last year, it seems that all my lenders have gone to what we call e-sign, to where you can go to a secure site, fill in your information, and then you can just upload your documents there. You never have to take them anywhere. And then they don't require me to have the documents. They will contact your employer and verify your income. They'll contact the IRS. They'll contact your banks to verify what you have in there. So it's become paperless. Some people call it Rocket Mortgage. We call it Blink. Works just the same. And what it does is it simplifies everything for the lender. They're able to verify the information within hours instead of weeks. So what used to take 4 to 5 weeks to close, we're now closing loans in 14 to 17 days. So a lot of that has changed. Same thing with appraisers. Because of business the way it is, and because they have more appraisers, we can now get appraisers in 4 to 6 days, where it used to be.
I sort of say there for a while there was a hang-up, right?
It was ugly. I mean, you were locking loans 60 and 75 days because you're waiting on the appraiser. There weren't just enough of them. So a lot of that stuff has changed. And again, it's all become paperless. You get to monitor your loan. You get to see everything. You get your approvals a whole lot faster, and you're closing. What you're going to start to see in 2018, and we already have one lender doing this, you won't have to go to a title company to close, whether it's a refinance or a purchase. You'll be able to sit in your home, sit in a restaurant, pull out your iPad, and close your loan and e-sign your closing docs, whether it's a refinance or a purchase. That is out there now. It's in 5 states. You'll start to see it coming in January.
Wow.
So the time frame, you still have to prove what you say. If you say, I make $1,400 a month from this rental income, you got to prove that. Mm-hmm. If it's cash, that's not proof. Right. If your deposits into the bank account aren't $1,400 every month, that's not proof. They got to prove it to count it. You still have to do those things. You just don't have to give me the paperwork. You just upload it into the system.
Sure.
But you have to prove what you say. If you say, I've been at this company 2.5 years, we have to prove that you've been there 2.5 years. Standard stuff, they just require documentation on it now.
So the time frame then, if somebody picks out a house today, they call you, start the paperwork, time you get the appraisal, all that stuff. I mean, is it realistic, 30, 45 days?
Oh, that's too far.
Really?
I just got notification on loans that I sent in. I had one loan that I got from the time I submitted it to the clear to close was 9 days. The other one was 14. Appraisal and everything, done. That takes a whole lot less stress off. It works wonderfully, especially if you're doing a purchase, because those purchase dates, that lender wants to know. That's where that pre-approval comes in. If you've done all this work up front,
right, yeah.
I'm waiting on the appraisal. We're done. Let's go. Which makes that approval when you go to make an offer in a house much more important, that you have that, because then you have the buying power that nobody else has. Most people won't have, because most brokers won't go through that process. We just try to make it simpler with our agents so you can close quicker.
Right. Once again, if you're thinking in any way about refinancing, buying a home, reverse mortgage, again, even if you think it's 3 to 6 months down the road, give Kurt and his office a call and get in there, establish this relationship, let them take a look at where you are. There may be some things to work on a little bit with credit or whatever. And Kurt, just real quick, we've talked about some of the deals with credit cards. Sometimes you can call a credit card if that debt is out of balance or a little bit. You can call the credit card company, get them to open your line of credit a little bit more, not have to do anything.
You
and
don't
sometimes
have to pay it down.
and sometimes switching from one card to another and just get them in a better ratio.
Yeah, let's say you got a credit card that's got a limit of $1,500 and you owe $800. Instead of paying it down $300, have them raise it to $2,000. Your score still stays, it goes up because of the difference. All they're looking at is the spread. They don't care if it's 1,000 or 10,000. It's the spread that they're looking at. Right. And by doing that, and that's at this time, there are a lot of credit card companies willing to do that.
I bet.
So it can improve your credit score. So it's pretty simple.
Sure. Your disclosure, sir.
I have several today.
Okay.
When I was talking earlier about the interest rate, I'm required to tell you a few things. That is someone with a 720 FICO score, 90% loan to value, 49% debt to income ratio. At the 3.625, that's an APR of 4.519. At the 4.625, that's an APR of 4.681. We're affordable interest mortgage at 7400 East Arapahoe Road, Centennial, Colorado, Suite 109. Regulated by the Division of Real Estate, equal credit lender, and our NMLS number is 298191. And you can always call us at 720-895-0500.
Mr. Rogers, thank you, sir. Thank you for joining us today. Cassie, thank you for running our Facebook Live today as well. And thank you for joining us for Haystack Help Radio. Be sure and check out our website, haystackhelp.com. And our helpline is always open, 303-333-HELP, 303-333-4357. Hope everyone has a great day, and leave it right here on KLZ 560.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.